Thank you. I'll use the next 15-20 minutes to kind of give a brief overview about Mahindra in two sections. One, I'm going to talk about short term. Short term is what's happening here and what's happening to our results. And the second one is more about philosophy, about how our group invests and where do we stand and how have we done over the past few years. Hopefully, I'll end up by around 20 minutes. And if I don't, give me a cue so that I can speed up very quickly to come to a close. And then we can have a conversation about this. Okay, so very quickly going to the presentation. Just quick economy update. I'm no economist and I'm not going to ponder about what this all means. But one of the important things to take from this slide is we are in a very uncertain world and it surprises us. Many of the results, many of the things comes as a surprise, whether it is President-elect Donald Trump's own win in the recent elections, or Brexit before it was supposed to happen 2 weeks before. I asked one of the economists, very leading economists, what's going to happen? And they said it can't happen, won't happen, but it did happen. And Japan is pursuing what is called as arrows. We will hope one of them at least hits the bullseye. And the last is China is actually on the positive side, is showing some positive light, and I hope it augurs well for the World Cup. Coming to India, our own surgical strike, another, one happened at the border and the other happened in monetization, and that was a short-term pain, we hope, and a long-time gain. We were having a short conversations outside, and I think I tend to believe that's what's going to happen. GST is one great thing we are all hoping for. It was on the cards, and we are saying, in Hindi we keep saying aati nahi, not coming as yet, but finally it started to come, and that's a good news. So is the rural indication. In a sense, after a long time in Q1 and Q2 of this year, Bharat and India both started churning out, and you will see that when I talk about the results. And except for demonetization, I thought we are in for a very good cycle, start of a cycle, which could have seen the overall robustness in the Indian industry. Demonetization will have an impact, hopefully short term, but that's the one. It has also been supplemented by a very good monsoon, and as you will see, tractors have registered a good growth, which is the harbinger of the change, because there is a theory that we have which says tractors, two-wheelers, tractors on hope, two-wheelers when the first cash flow starts to come, when you harvest, you get four-wheelers. So something like that as a cycle. So that we are very happy to see that happen. This is a chart I share with analysts. So whatever I told you is what is covered here, but two good things are happening, that commodity prices have not run away. So it has strengthened but not run away, and the inflation tends to be very much under control, which is a good news. At this stage you would have seen the inflation starts to run off, which it has not, and that's augured well for the company. So this is something, when you see that not any great increase in MSP, and there is competition intensifies, and there is something which comes specific to Mahindra, and they say increase in cess from 2 to 4%. Sometimes you said road clearance above this is a special cess, and then you say why road clearance only above something? What has it got to mean? And only majorly Mahindra vehicles are covered. It kind of starts to hurt, and then we have our own incentive in Hardwar going away, and then you kind of ask yourself, why me? And then you turn back and say, try me, and then say, forget about that. That's what they throw at you. When they throw curved balls, you should come with your own answers, and that's what they said. We launched good products, and Scorpio Intelligent Hybrid is a important now stepping stone to keep the evergreen products evergreen. And the other one is that future belongs to electric vehicles, as we talk more about the problems of green. How prepared is any company? We said we are very well prepared, because we bring you third generation electric vehicles. Yeah? Others will bring you first generation electric vehicle, but we have gone through 3 cycles, and that's the kind of thing that we bring in front of you. And while even waiting for all these things to come, the positive cycle which has not started, we've been working on discipline in terms of cost and working capital. Just to give you a perspective, we have this dividend payment in August. So first half always happens to need cash to be borrowed. But happily, we were able to find that cash from the working capital, so we didn't have to borrow anything, including to pay dividend this time. Yeah. So therefore, our quarterly performance, just very quickly, I told you, I'm sorry, I'm craning your neck a little bit, but I feel like if I keep standing, I don't want to stand still. Okay, so so first and foremost is we launched our vehicle. This is the Bolero Plus. This is sub 4 meter new one. Bolero is our iconic evergreen, one of the products which has kind of always been the big seller. To continue in that one, we got that, and we got very good response. The second one, in terms of volumes that we go, so clearly, I said we start off cycle, seeing a good cycle. So if you see auto, overall for us it's been 11.5% growth, double-digit growth, and if you see that the whole cycle from 13 to 16 has been flat, so 17 has seen an uptick in terms of volumes, and that's very healthy. And within that, if you see utility vehicle at 16% and overall domestic at 12%, augurs very well for our performance. And please note that in PV, our personal vehicles, among the top 5 OEMs, we are still the fastest growing OEM in that space. So we're doing good growth, and we are doing well in an overall scenario. And if you look at exports, not only domestic is doing well, if you look at exports, we grew 11% in the quarter, and for the first half we grew 18%. So again, very good growth. And if you see Australia, South Africa are doing very well with new product launches, so our new products are getting accepted. But our neighboring market is a stellar performance with Nepal and Bangladesh adding for a lion's share of it. But the point I wanted to make is domestic market is doing well, neighboring markets are doing well, but wherever we are going to new markets, they are doing well as well. Okay, so then come to farm equipment. This has been a great story. In the last 2 quarters, the industry has grown very high. So in Q2, the industry growth was around 30, around what, 21, 22%. What is the overall growth? I'm not able to see. Industry grew by 28%. So overall industry grew by 28%, but M&M grew that quarter by 37%. So we did a good row. In H1, our market share is the highest that we ever got. So it's a very good first half that we have had in tractors. So everything that we have done in the past is coming to help in terms of when the industry has gone well. So overall 42.6% market share for Q2, but 44% in Q1. So overall a very good first half that we had. And market share gain has been 3% for this one. We here also in Q2, again, exports have started picking up momentum with 20% growth in Q2. Again, the message is the same. Musa, you see, is showing a negative, but don't get worried about that. That's because there were stocks which we are trying to correct. Overall, in terms of retail and overall Musa, it continues to, Mahindra USA continues to grow, and South Asia and Africa are starting to pip in terms of growth cycles going up. So overall, both in farm equipment and auto, and a good performance. And if you put that into financials, that's what you see, that FES for the quarter, a growth of 36% in terms of volume, and auto 11.5. So 10,172 crores of turnover in Q2, a growth of 16%, and an EBITDA growth of 28%. So revenue growth 15% at 15.6%, say 16, and the EBITDA grows at 28. So we are improving 140 bips of turnover. And when you kind of see that, why me, I showed a slide, and there I said, listen, Hardwar benefit is going away. That should have taken up a large amount of my OPM, out from me. It should reduce. The model mix always tends to be poor when new products launches are coming in, but that also has been negated. And last but not least, when we launch new products, the depreciation and amortization goes up. So all these negatives have been absorbed positively, and then still it is 140 bips higher in the second quarter. PBT is even higher at 34%, and that's because our subsidiaries have started giving a better dividend payout to us. And this quarter, there is a TechM dividend which is much higher than previous year, and that helps. Overall PAT is higher by 29%, and that's versus the revenue. So in Q2, just to say 15.6% revenue growth, 28% EBITDA growth, which is the most important number in there, and total PBT growth by 34% and PAT by 29%. So very good quarter for us, and it started to have jugalbandi between Bharat and India at this stage. Okay, and in terms of segments, auto, in spite of all the problems and coming out from that, revenue up by 11.7 and profit up by 12.5, and FES is of course making up for last time by 23% on the top line and 37% on the bottom line. Okay, and all our group companies, Tech Mahindra and Mahindra Finance, continue to do and churn out very good profit, while on the real estate side, Mahindra Life Spaces and in the leisure space, Mahindra Holidays are starting to change gears in terms of profit growth year on year. Okay, so and we did launch some new, and I talked about this in the earlier slide, Bolero Plus, making us the iconic product, continue to be iconic. Now coming to getting green on the field and getting new and prepared for tomorrow, eSupro. This is a passenger vehicle on EV and a full-fledged EV 4-door in terms of E2O. So that's what I was talking, that we now done our first vehicles, our first EVs were sold in UK in the year 2000, or a little bit before that, 99, 2000. So now what we have on roads is the third generation vehicles. So I'm sure we will, we have this. And not only that, in terms of this is the new digital world, so how are we connected? So we launched something which is almost a first in the world, or what we think is the first in the world, a DigiSense, which connects not just one vehicle, but all our vehicles across the fleet, whether it be a tractor, a truck, or a construction equipment, and offers a plethora of services to the customer, and offers huge amount of business opportunities to all our partners. So this is what we are doing. So here I stop. Now I'm kind of talking about performance, and now I say, oh, now I'm going to talk something different, which is about management philosophy. And I thought some of you may talk about saying, hey, are we putting too much money into new businesses? Why not concentrate on current business and continuing business? And you can even talk about some of the returns on capital seems to be, kind of going down. Should we think differently? Or we say, why not stick to core competency? And those people would generally talk about auto and tractor as core competencies, though we don't necessarily subscribe to the bit. But this is one question which we need to answer. And is there an exit philosophy? What is your exit philosophy? So and we kind of say, hey, can we just roll back and explain this in a way, in our own way, which answers this question. And we say, okay, let's talk about our journey, which we started in 1945 with two enterprising brothers, K.C. Mahindra and J.C. Mahindra. And they actually published in Times of India in 1945 a statement of intent. Okay, this is from that 1945, so it will not be legible, don't worry about it. And that evolved M&M ethos, and the first one which it says here is that, I'll read it out because it's not, encouragement of private enterprise and entrepreneurial spirit. This is the ethos that M&M will evolve, and that's what we took from there. And we have grown, therefore, along with the growth of India, whether in the first phase that was required for agriculture and mobility, we provided the solution, Or later, as it evolved as a freer economy, we participated in adjacencies and new businesses where it's required. Real estate or residential and properties were one of them. Smart cities talked about today, world cities came 15 years back from us. So all that is the one. And then as it evolved further, we also evolved along with the group, country. And now the encouragement of the private enterprise and the initiative of individual. So it's it's no accident that we are in 20 industries. Okay. When you are in these industries, one question that we ask is, what is your investment philosophy? And we often have talked about this, that in the very first Blue Chip, which is the annual conference that we have, this is about many years back, and we laid down what is our investment philosophy. So I said, any business you get into, be the leader in that business, doesn't require too much explanation, or any business you get into should have global presence. And the word presence is used very judiciously, in the sense, many of the business may not go across the globe. But can you be winner if all the global competition comes to India? So that's the global presence point is. It's no rocket science that we say it should have financial returns, each one should have. And it should have customer centricity as a backbone, and it's the most important part of it. So, and we have discovered over time that B2C is where we are, is our sweet spot. But the most important thing we also laid down in that over and above this, please don't bank on cost arbitrage because you happen to be in India, bank on innovation arbitrage, and that's the one which you said. And then we said that anybody who is able to demonstrate that my business talks about these things, leadership, global presence, financial returns, customer centricity, and innovation as the backbone, will have money to support it. Okay. But one of the big things is, when you go to too many industries, how do you have span of control? Do you have depth? How do you bring focus? If it is a conglomerate, then the decision gets made at the top, and therefore your bandwidth is limited. What we have is a federation, and the point will make that point that Dr. Pawan Goenka, who is the MD of M&M, focuses on auto and farm business, and probably is the last word on it, and he leads that from that point of view. But he doesn't get into real estate with Anita Arjundas at the other end. She makes all the calls on the real estate business, knows it, and may kind of give me some advice on some other business, but very limited to advice. She has no role, doesn't get involved in it. So each one has very clearly got his own ship, and they steer it, and they are captains of that ship and report to their respective boards. Yeah? So very clear autonomy. We call this a federation, and that's why we have a strong bandwidth and independent, because we are not trying to have a conglomerate structure here. Okay. So what our risk philosophy has always been: calculated risk and financial presence. We have had risk-taking capacity, which we are trying to kind of say, we need to go into new business. And we will talk about what we did last decade and how it is helpful today. What we are doing today, hopefully, will create the big jump for us in the next decade. But at the end of the day, it has to be with financial prudence. So you will be happy to know, as investors, that after investing everything, M&M's debt equity, net debt equity is 0. So I don't have a single borrowed money which I have invested. So it's not nothing is at risk. What we have earned, we have judiciously returned part to the investors and judiciously invested part for new businesses. Okay? And in the investment, past has paid off. So two good, simple examples which are, there. Punjab Tractors, he said, how could two tractor manufacturers come together and create synergy and value? In 2 years' time, we record 95% of the cash invested, and Swaraj is a great brand today, which not only Mahindra Group, I think the country is proud of. Coming to Satyam, it was a case, and they all say, who will put up his hand, and we put up our hand, and today it's helped Tech Mahindra be one of the ITES giants. Okay? So, and just to give some examples of value creation, a Tech Mahindra investment, including one late stage investment, is about 150 million. Otherwise, it's 1 million actually. and that is now worth 1.8 billion. So I could claim 1 million went to 1.7 billion, and that would, there are some multiples which people talk about investments. So this would be one of the best investments ever made. Mahindra Holidays 4 million to 387 million. Our MMFSL we invested 23 million, it's worth 1 billion. Our Mahindra Life Spaces 42 million is worth 130 million. So all of them have grown by leaps and bounds. These are all the investments I made in the last decade. The next one is the one which is I call evolving. So we did SsangYong, it's 320 million, now worth 722 million. And CIE, which was auto components, was one of the toughest areas that we got into. It was almost like we bought something in the old age, old technology era, and suddenly the 2008 tsunami hit us. But in spite of that, you see that 80 million of our investment is worth close to 200 million today. So still did that kind of a growth here. And incubating industries, we have incubated in logistics. We are the biggest solar EPC. We want to be the biggest solar EPC. Let me not get ahead of history. And we are the first pre-owned car and service users in India. And all of them have attracted private equity investment, which is at multiples to the valuation that we are putting already. Okay, hopefully one day they will test the value creation criteria. And if I go that, and what we have done last is we have created a, when I showed that slide of managers, I showed something in between called Mahindra, Zubain, by the name Zubain, who handles a thing called Mahindra Partners. What it does, it puts a PE, kind of a virtual PEs setup within Mahindra to look at all new investment with critical eye. So the way you will look at us, we are having Mahindra Partner look at the new investments. So the last question which will get asked is, so then where is the group going to do? If everybody does, so is it not good to let them be alone? And this is where the group comes in. We have what is called war rooms. War rooms is where we review, and review process and rigor is brought in. So there we all sit on the same side and challenge the business they've laid out. So that at the end of the session, each business goes back with a confidence that they have a good business case which can withstand any challenge that is thrown by the board. Then they go back to their own boards and say, hey, here is the business case that I want to lay. Then they take direction from the board in order to move forward. And this rigor actually helps them do better business. The talent management is a great one. India, if something is short, it will be good talent, and therefore this will be worth its weight in gold. And our ability to provide and move people around the group is of great help. Group synergy is like Saraswati. It is always felt, never seen. Yeah? So it is not it's not seen very evidently, but any group, when Satyam happened, our ability to bring group synergy helped greatly in quickly managing it. CIE, to value created the same, and so on. And last is but not least is our treasury and financial management comes in very handy to the entire group. And that plus the brand value stands the group therefore has a reason to exit, even as federation every ship do. And we have laid down some financial metrics, very broad. Just look at every time looking at 3-2-3. In 3 years, double the revenue, triple the profit. We will be very happy as group headquarters. And if you do that, nothing else needs to be done. The second one is a country like India, for the VUCA world, we need 50-50. I said 50% margin of safety. And focus on margin of safety, so even if the business case falls 40-50%, you still don't make loss. And 50% break, ROC, because we need to keep up with the investment. If we need investments, then we need good companies to be at 50% ROC. And the other one is always challenge and focus on shifting orbits, and we call that a 10x theme. That can you go 10x in market share, in volumes, in customer satisfaction, but just change orbits. So those are the group role that comes in. But having said it, because everyone applies rigor in coming back with investments. This is our next 3 years investment cycle. Our capex will be 7,500 crores and our investment will be 2,500 crores to 3,000 crores. So overall total required is 10,500 crores in a cycle, and that's what we make more than that kind of cash flow in a 3-year time frame. So we still, you can see how the financial prudence plays, even though we are talking about aspirational goals. Yeah. So and bulk of the company's investment goes into auto, tractor, and related businesses. Okay. So and what did we achieve through this? And I think results is an important part. And can I request you to do one thing? Why don't you sit here? Because at the end of the session, if you have a cramped neck, then you will blame me. Yeah, and I don't have money to compensate for that. You know, all has gone into businesses. Okay. So market capitalization in 2005. You know, our market cap was less than $1 billion, 992 million. Today, our listed company's market cap is 23 billion, which is a 23x growth. A CAGR of 37%. That's what is our achievement in last 11 years. And if you look at from 95, which is 21 years. And why 21 years? Because it's a full house. Yeah, not 20. Because this is I've always shown 21 because my boss retired after 21 years as a director, and from that time I always used 21 and 11. So it's very consistent. So don't think 20 years changes this. It doesn't. Yeah. But 21 years, yeah, so generally that's the trick, right? So I'm just saying it's no trick. Okay, so 21 years, the CAGR is 26%, and our growth is 108%, 108 times in terms of market cap. From something like 216 billion, our market cap is today around 23 billion. So that's the kind of thing, and you have the figures of each of the companies that is listed, only listed companies. And the unlisted are the other jewels which will create value as we go along. Okay. So, but and just not numbers, but we've created some number ones. Number one in terms of rural NBFC. Number one, you know, used car and used service company in India, multi-brand pre-owned car. Number one holiday space. Now not only number one in India, except for US, we are number one. In this, except that one continent, if you take all the other continents, we are number one, and that allowed us, you know, when we went and said we want to test this theory and said we want a 50 years bullet repayment bond. We are the only one who did that. Yeah. Okay, and it's a bullet repayment bond from payable in 2063. It's been oversubscribed and done well, and the credit ratings, which is of the highest standard, and awards which kind of go with it. I'm not going into each of these awards. I'm sure this will be put up. You can all, you know, have a look. But this is nothing new. You see it in our annual reports. And what I showed there was the group's market cap and how it has progressed. And here, what I'm showing is what is M&M share price. How is that gone up? So in 21 years, again, the last 25 years I've taken. 25 years, it's 117 times, or a CAGR of 21% over 25 years. And if it is 15 years, we've grown up by 28% CAGR and 40 times. And last 5 years, we've grown at a CAGR of 12% and 1.7 times. So the slowness has indeed been there in the last 5 years. But if you look at overall, we've grown heavily, and that's where I'm very happy about the cycle that we are changing. Okay, but with compared to Sensex and gold, we you know, outscore them in all the parameters all through. So I said, come to us, stay with us, grow with us. Thank you.
Thank you so much, Partha. Can we have some questions?
Sir, thank you so much for the presentation. Talked in depth on the investment philosophy in the presentation, and M&M has obviously done a fabulous job. Question was a little bit on the exit philosophy, because you're entering so many businesses, and obviously there will be successes, there will be failures. So what are the red lines, or what is the philosophy that you have, while taking a call on exiting a business, if any? So that was my question.
Yeah, that's a very good question. So if you look at,
Then a party.
sorry. Yeah, it's okay to go ahead if there is any add-on, then yeah, okay. So it's a very good question. What is your exit philosophy? I thought I kind of alluded to it in my presentation, but I think we need to expand on it. The first thing is, we are a strategic investor. We are not a financial investor, so our time frame does not necessarily, is the same as that of a financial investor. We will have a longer horizon period. The second one is that how to exit is also not a sign. It's not about giving up. It's about coming in a new avatar, coming in a new way, coming in a new form. And let me give you some examples. And when we talked about Otis elevator, you would not recall, many of you would not recall, there's an elevator business is one of the things we exited from. Yeah, that was for a very different kind of reason. Ashtec, that's not, that's another company. In ash handling facilities, we were there. It was a big business, and at some point we decided we don't want to be in this business, and we exited. Yeah, there were very strategic, rational calls made at that point of time. I'm just giving a couple of examples. There are many other. You know that oil rig business was another one which we gave up for a period of time. So, but this is not something we advertise. This is something that we have to do as part of our portfolio revision. But let me give you a different kind of value creation, even when we are thinking differently. So let's come to CIE. We did auto components. We invested $800 million to create a $1 billion company across the globe. We acquired 5-6 companies. Then 2008 tsunami hit all of us. Then, we were doing, and at some point of time in every investment like this, people ask me, what is happening to auto components? How much more money are we going to put in? Yeah? And what's this? So what we did is, with CIE, we worked out saying, hey, you are suboptimal in size, we are suboptimal in size. Can we, through a merger, create a huge synergy? We own 20% of Mahindra CIE Indian company, and globally we own the second largest shareholder in the global company. But by this, what have we achieved is a value creation, where what we have invested in CIE Spain is 5x, and what you have invested here, I showed you MCIE investment showing 3x kind of growth. So this is a different approach to value creation. Let's not call it exit, let's not call it entry, let's call it that where there is problem, how do you restructure to give huge amount of value creation? Yeah. So the last one was two-wheeler, where we said, listen, we are always been a great niche player. How do we restructure our business to be the niche player and come out? But at the same time, whatever we are doing at the mass market, in a sense, we are able to down and bring down the cost. So there are various ways where you have to, and you take all the 9 yards of, what is allowed as strategy and, what do you call, strategic play and portfolio play that we can make. Okay. Does that answer your question?
Yes, sir, quite a bit. Thank you. Second question I had, was probably the automobile industry as a whole. If you look at electric vehicles or shared mobility or all things taken together, it's probably going to change more in the next 5 years or 10 years than it's changed in the last 25, 30, 40 years, possibly. So how do you see M&M reacting to all of this in terms of A, shared mobility specifically, and B, in terms of electric, we are already there quite a bit. So how, do you see incremental investments in both these areas, or how do you see the investments panning out slightly differently?
Thank you. Thank you. I'm sure I didn't plan that question. Okay, so basically, thank you. I think this is something which is one of the topics which will keep us awake, not only in the past, but also currently and in future. And there are two platforms to what you are saying. First is technology-wise. What is the green philosophy with the green evolution? What is happening to the world? How is it moving forward? What is going to happen? What is the conventional fuel or fossil fuel, as it's called? What's the prospect? So this is something that all of us can have some own views, but nobody can say with certainty. But what you can say with certainty is the proportion of cars which are green will grow as time grows. And the trajectory of that will be faster than the trajectory of the overall industry of vehicles. So that's one is clear. So we had to, 5 years or 7 years back, we had to take a very real call and saying, what do you see then? And we saw then this is very clear, and writing is there on the wall, so to say, to those who can read that. So we made a real option call when we invested in Reva, a purebred electric car company, which is what I was talking about, that now we have a third generation electric vehicle on the roads. What do you mean by that is we have done one cycle, understood customer requirements, did the second round, and now we are in the third round. So that's on the electric vehicle side of it. So can it be other things, hybrid, pure? We got a purebred, and we got, so in between is the hybrid, and that is also a technology investment are we making. Then there is also something more, which is kind of saying, can it go to something other than EV? Of course it can. The probability now is shifting more towards EV as compared to 5 years back. 5 years back it was a real question. Today it seems more probable. And with solar coming in, it could have sun to, we call it roof to car and to mobility. So you can actually have a complete cycle, a major portion of the cycle coming from directly, especially in India, directly from the sun to mobility. So clearly seems, but there could be other technology, and we are investing, and we are not complacent on that field. But there is other technology like driverless car and connected. So you saw DigiSense is just one way of telling us, don't worry, we are there, we are aware, and we are there. Some of it we may not be the first in technology because it's too costly to do that, but we can quickly follow. So we're taking a judicious step on that. The second big platonic shift is about shared economy versus use own cars. And there is this we divide into two portions. Objective of transportation versus objective of, object of desire versus object of transport. And I think that's two is going to exist. So therefore, in both, we think we can play. We had announced a tie-up with one of the major shared transportation companies, and that is one step in the direction of saying we'll participate with both. Is there a change set of players in the system and business models are changing? Yes, of course. And can we relate and still be meaningful? Of course we can be. And what we will excel is in the object of desire. What we will fully participate and excel in making the shared economy viable and thriving. So in one we will participate and be partner, in the other we will try to create a niche for ourselves. That's the broad game, and I think that's something we can play very well.
Thank you so much, sir. Thanks a lot for the detailed answer.
I think very well answered. Can we have questions from someone else?
Thank you for the chance. I had few questions around your maybe way to look at the rural demand. I mean, we hear a lot around things changing and monsoon spells going on and other things. But given that big chunk of your FES and auto business has relation to rural demand, can I understand, I mean, what are the factors that you look at, how rural demand is going to shape in the current year or in the case to come, and how do you look at it as far as the current scene goes? Thank you.
As far as the last sentence, please.
As far as the current scenario goes.
Current scenario. You are absolutely right that Bharat and India have to both chug, and in a sense, I hope I made that point.
Yeah.
That after a long time in Q1 and Q2, I started seeing the cycle of Jugalbandi coming in, or participative coming in, where I started a cycle movement for India, and not just only limited to M&M. Here I was making a broader economic statement as I see it. Okay. Now coming to your question, Your first is, how do you look at rural? Okay. There are three factors that it can go in when you talk about looking at rural demand and how it die. First one is household income. How does the household income, how is it growing? And a part of it is income from agriculture, but not all. It also means how the, if it's a tractor owner, how the tractor is being used for other purposes to generate income. How part of his other, is employed elsewhere in the ecosystem, whether it be processing unit or whatever. So this household income is an important criteria that comes. The second important criteria is irrigation and monsoon. It's a combination. If monsoon is not okay for 1 year, I think we still can, can be half in terms of, because 50% of India is well irrigated and can withstand easily one cycle, but some portions can't. So it's a combination of irrigation and monsoon that we can look at. The third one you always want to look at is what is the ecosystem helping or hurting the rural market. That's a driver. That part, two parts. Some government point of view, something like Manrega. It has a real impact in the rural area. You can't understate that kind of impact. The other comes from a combination of government and private, is what are the projects that are happening around rural. For example, if a rural road is being laid down south, the entire villages around the road which is being laid out suddenly gets a huge lift up, which happens in terms of, I think, the third part of it is MSPs. How is the MSP going? Because that's the clear bifurcation that happens, in terms of the rural income coming in. If they're MSP, they know this is a barometer of my price. For example, now the government just today has announced, and Chandra, correct me if I get the figures wrong, in wheat 6.6% and about around 15% plus on the winter crops. Now what it will do is it will give a huge boost to saying, my income is secure. So this is the third portion of it. So the third one, our drivers is this kind of thing. When they say no increase in MSP, the immediate thing is that the sentiments do come down. Yeah? And this growth with this increase which has been done is a very, very good one. So these three are big drivers that I would look at when I look at it from a rural point of view, household income, yeah, and how this driver. So for example, there is a connectivity between the three. If there is a road laying happens, tractor can be used to, pull things. And if it can be built, again, tractor owner's income goes, household income goes up. So there is, of course, connectivity between the three also. But these are factors that will do. And how is it working? I already answered in some sense. The MSP increase will help. The projects, the rural projects which have been, big projects has been, they've been announced. I hope this picks up momentum, so that will help. The fact that now productivity of agriculture fields has started improving, that will help. And employment is the last part of the cycle which we will see as we go along. So that should help as well. So this broadly.
Okay. Can I ask, how was this festive season?
Yeah, the festive season was fantastic for tractors. In September, we saw a growth of 60%. In October, we saw a growth of 60%. So in a sense, I was telling somebody, I shouldn't start this topic because the next question will be on that. If a time of demonetization was to be picked, they picked the perfect time because the season had just ended in a sense. The lull period had started and that demonetization came in. So all the festivals, all the deliveries, everything actually happened. So we had very good 2 months. So, and we now have increased our outlook from an industry of 15% growth in tractors to 20% full year. So that's the kind of season has done well. Overall, it looks augurs very well for the full year. In auto, I showed again in Q2 in season. In October, for example, our retails and deliveries were the highest, very high. So we are enthused by the ground level actions. So none of these, what you see, our billings in October will be lower than our retails because we wanted to make sure that we are lean as we go out of this reason. So very good ground level activation both.
Can I ask one more question, please?
Yes, please.
Actually, this is regarding the BS6 implementation. I mean, the government has decided to skip one level and go to the other level by 2020 or so. How do you see this impacting the demand of diesel vehicles? By this, I mean to say that the incremental cost that may make diesel vehicles incrementally more costlier.
Yeah.
Do you think that the feasibility of diesel vehicles will be impacted? Or overall, what is your take on this? Thank you.
See, there are two parts to any, this is a major, you are talking in 2020, there are going to be a major change in terms of fuel efficiency and pollution aspects of it, which was called Euro something, Euro 6 or something elsewhere and so on. So clearly this takes a lot of technology and engineering in order to achieve that, and there is going to be a cost implication for this. But one thing is, it's going to be all round, so it's going to apply to everybody. It's a level playing field, so everybody who complies with this will have that kind of cost. So it's an overall going to be an increase, but therefore will not change the dynamics of the industry because of this. However, your second question is what happens if say 10% cost goes up because of this. A vehicle which costs 4 lakhs costs 4 lakh 40, yeah. So what does it do? And the key thing is that we've been constantly seeing upgradation of vehicle for people, and if they believe this is what is the norm, and I think they will adjust to that kind of thing. And sometimes what happens is evolution of other model, including leasing, etc., which I hope by that time clearly is well in place for India. Then you don't look, in US nobody looks at the value of the vehicle, they look at the installment. Then maybe those kind of tools will also be available. So in a larger sense, what I'm saying is there will be small impact. I don't see a tectonic shift there. There will be some small impacts, and I think that small impacts can be overcome with other ways that we look at it, and hopefully by that time your interest cost may match a US rate or this, so there will be some compensating benefits also which will come. So they say that in hope rest many things. So.
Thanks for your time. Thank you.
Any more questions? Okay, I think fair enough. I think we'll wind up the session as no further questions. And thank you so much, sir. I think it was really very insightful, and especially your lean season concept with respect to demonetization would mean that the impact could be much lower than what most people anticipate.
And you couldn't have got the timing better.
Yeah.
Thank you.
Thank you, Mr. Parthasarathy, for a very engaging session. I would like to thank the participants as well, and I would request you to accept this small memento as a token of our appreciation.